Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training course. So we're going to do another stock analysis of Facebook. So we're going to do another company called Facebook. And what we're probably going to try to do is break down several companies and try to get you a really good understanding of, what to kind of look for when you're looking to decide whether you want to trade or invest these particular companies. And we want to do it in a really unbiased way in which we're not hyping it up and trying to make it seem like it's the best thing since sliced bread, but try to give you something to think about whether you're deciding that you want to trade this company or you want to invest in it long term. So what we're looking at today is Facebook, right? So known as the ticker FB. Pretty much everybody knows what Facebook is. They're a very well-established company at this particular time. And the reason why we're going to talk about Facebook is because I've spent a lot of time as a media buyer, buying a lot of Facebook ad media on behalf of the clients that I was working with. So I really started to understand what the real business of Facebook was. And I understood that the real business of Facebook really was not the social media side, but really was the ad buying side. And so Facebook really essentially is almost like television. Television is a platform to get viewers on so they can sell advertisers ad placements. So their job is to get content that drives viewers, right? So we can sell advertisers ad placement. Facebook is essentially running the same model as just on the internet. How can we get content, right, that's going to attract an audience? So then therefore we can sell ad placement to advertisers. The twist in Facebook, or the USP of Facebook and really of social media, is all the content is provided by the same people that are coming to view the content. So what's different in TV and Facebook is TV, the content is created by professional content creators or production houses, right? And so then therefore the television network had to pay those production houses, right, for their content and then turn around and try to get ads to run on that particular content. That's how they made their money, made their margins a lot smaller. With social media, the same people that view the content a lot of times create the content. And then they create the content that now they run ads on. So that's kind of Facebook's model. Now, Facebook is, I heard, moving into you being able to monetize your Facebook business page, but I don't think they've really gotten and really built that fully out yet. But I heard they're getting ready to approach that, or they already have it. So what we're going to do is do like a basic preliminary breakdown of Facebook, give you something to look at. But I really want you to understand the model of Facebook. Facebook is not a social media platform, even though it's presented as one. Facebook really is an advertising platform, right? But for them to be able to sell ads, they have to be able to figure out some kind of way to get content. So then what do is they have a way to pull people and convince people to create their own content for their platform. Facebook sells access to those particular people, right, to advertisers. And that's how Facebook really makes their money. So Facebook literally makes their money selling ads. The same thing with Instagram, right? And they also run ads in Messenger. And then they also run ads to some affiliated sites like Tinder and places like that you can access through the Facebook ad management platform. Now, let's first talk about what are some of the apps that Facebook owns. So we know they own Facebook. We know they own Messenger, which they've now split off of Facebook. We know they own WhatsApp, which I use a lot. They own Instagram. They own something called Oculus VR, Masquerade, Well, Giphy, which I use, Aux, Bump, and Tune. And so you can go to this particular page. It's called GBK Software Development and Consulting, just / apps Facebook owns. And they pretty much break down every app that Facebook owns and what it actually does. But we understand really the ones that really are making a lot of the noise are the first four, which is going to be Facebook app, Messenger, WhatsApp, and Instagram. Facebook runs ads on app, Messenger, and Instagram. They don't run ads on WhatsApp. And I've always told people that if Facebook decided to start running ads on WhatsApp, or if they are, I'm not seeing the ads. I think it'll probably move Facebook's share price up really, really rapidly, because that's a whole new advertising platform that I don't really think they've spent a lot of time trying to figure out how to monetize it. Now, what we want to look at is let's look at Facebook's 1 year chart. OK, so we're looking at their 1 year chart. We see around let me get rid of this. Around 826, they was around 303. 9/2/2020, they was around 302. We saw a little bit of a sell-off. Now, what we see with Facebook a lot is anytime we get any news of any regulatory issues with Facebook, a lot of people get scared out of the stock. Doesn't make a lot of sense to me because they figured out how to manage all those issues. But a lot of times people use that as a justification to trim their position, right, and come in at a lower price. OK, so Anytime you hear anything about, well, Congress is going to do this or this is going to be this regulation against Facebook and they got to go speak before Congress, a lot of people get scared out of the stock. But what you got to understand is that when you're seeing these CEOs of these companies on these cable networks talking to Congress, understand they've already had the conversation behind closed doors. That public conversation is really for us. The real conversation has already taken place behind closed doors. So you're not going to get any groundbreaking information during the public presentation of the conference that has not already been discussed behind closed doors. So really it's a form of entertainment for the masses. OK, so they're not bringing Facebook in front of Congress to, break the company down, yada, yada, yada. That's not what they're going to do. Facebook has very deep political connections. They donate to a lot of campaigns. They donate to a lot of politicians. They understand how to play the game, and they know how to create an environment where they're going to continue to be allowed to do their business, right? Because they make sure that the people that can hurt them get well compensated for allowing them access to do what they do. So we're seeing that, we get around the 300. We have a few sell-offs. We sold off hard here. And this is either some type of regulatory issue, or maybe this was the issue that they were going through with Apple, where they sold off to around 250 and they came back up. But what we want to see is that can Facebook really, we're looking at maybe the 300. Can it really safely push past 300 and go to higher levels? When you're looking at a company like Facebook, you're dealing with a mature company, right? This is not an upstart company. This is not a speculative company. Here's their 5-year chart, right? So if you would have gotten around 2017, around 125, around 5 years later, you'd be looking at around a $300 price point, right? So this is not a upstart. This is not a speculative company. This is not the type of company where we think they're going to do something in the future. They've proven that their business model works. They've proven that they have really, really good management. They've proven that they know how to acquire companies and embed those companies into what they do, and then therefore make those companies profitable like they've done with Instagram. They understand where the kind of social media space is going and how to continue to position themselves. So when they added Facebook Live as a way to undercut Periscope on Twitter, they understand how to play the game and they know what they're doing, and they're a very well managed company. If you look at a lot of their financials, right, they're not like, you can always improve on it, especially if you want to really start going through everything with a fine tooth comb from an accounting standpoint. They can always be improved on. But like I said before, is that you're looking at a well-managed company. This is not a terribly managed company that doesn't know what they're doing. They don't have a CEO that makes a lot of bombastic statements on the internet to try to hide the fact that the financials aren't any good. They're not talking about what they're going to be doing in 20 years to try to make up for the fact that they're not doing really well right now. This is a really well-managed company. They know what they're doing. They know how to make money, and they know how to return value to their shareholders. OK, so as a long-term investor, as a trader, just understand that that's essentially what you have with Facebook. Now, we want to talk about here. Facebook is getting ready to start like an e-commerce. So they already started at an e-commerce place where they have the e-commerce internal to Facebook. So historically, when I was doing a lot of e-com on Facebook, our e-com platforms are outside of Facebook. We would utilize a Facebook pixel, and then therefore we would pixel people, and then we would advertise with them on Facebook, and then we would retarget them on Facebook utilizing the Facebook pixel. Facebook has figured one way to protect our model is to make e-commerce internal to Facebook, so it's still all part of the Facebook universe. OK, and I think eventually Facebook will probably drop its own app just for e-com. And we talked about earlier with the Square, it's called wall-to-wall services. Well, once you bring the person in your universe, you offer them so many services they don't want to leave. OK, so what Facebook understands is one way to protect ourselves from being opted out through like the iPhone and through other applications is if we just make our e-com internal to Facebook and then communicate to small business owners that, you know what, it's easier for you just to make your e-commerce platform already be on Facebook, right? And then therefore you don't have to worry about a secondary platform that your buyers may not have access to, right, to get to us while you're on advertising on Facebook. So it's really similar to what Facebook does with groups, right? You can go get you a group and put it on another platform. But what happens now is your people on Facebook got to leave Facebook to go to the group. If your group is already on Facebook, it's easy because your people a lot of times are already on Facebook and they can just go to your group on Facebook. So that's kind of how Facebook appeals to people with their wall-to-wall services. We can make it easy where you never have to leave Facebook. So they're doing that with their marketplace. We also talked about the fact that I've heard that you can monetize now your Facebook page, similar to what you can do on YouTube. So Facebook is coming up with more and more ways to make it to where you don't want to leave Facebook, even though, in my opinion, some of the other websites are better at what they do than Facebook. So YouTube video search to me is superior than Facebook because, YouTube being a Google entity, one of the things that they specialize in is search. Now, YouTube search is not as good as Google search, but it's way better than Facebook search. It's hard to find videos on Facebook. Now, we want to look at Facebook off the NASDAQ, their institutional holding is about 80%, right? So institutions are very, very confident in this company because essentially they have an 80% holding, all right, 80% ownership, right, of the shares available to be traded. So you got to understand is that this company is seen as a really solid investment by a lot of institutions. Like I said before, this is a mature company that has an actual business model that has been proven to work. This is not a speculative company. So, yes, we can always look at the financial statements and talk about where we can improve at, how we can, get another 3 to 5% off the margin, where we kind of, where we could lower some expenses. But you're dealing with a company that has shown that they know how to do business. They know how to do business at a very high level. They know how to fight their competitors off. They know how to acquire competitors. They know how to do what they do. And you're also looking at a float of around 2.39 billion. So they have a lot of shares, right? They have a massive, massive float compared to like a lot of other social media platforms. And you're looking at their short percentage of float. It's around 1%. So we know that short sellers are not confident, right, that they can attack this company from a short perspective and be successful. So we're seeing around 1.16%, if that number is accurate, of the short percentage of the float, which is 2.39 billion. So one of the things you want to look at is that short sellers have decided to just leave this company alone. It's not worth it. So when Facebook is selling off, it's not selling off because it's being shorted. It's just selling off because people have decided to trim their position, maybe put their money somewhere else for a short amount of time and come back in. But this is a very, I would call this, Facebook is almost like a cruise liner. It's a really, really, really big boat on the water. It doesn't necessarily move fast, but it gets to where it has to go. Now, something we want to talk about going into this next quarter, right? What's going to be really important. So the Q1 results on April 28th is going to really, show us something. But we understand is that that's going to be for first quarter. Facebook historically is not to me, a first quarter, second quarter company. They're more, Facebook is not a early year company. They're more of a later year company because Facebook makes a lot of their money off retail advertisements. And a lot of times the retail game picks up later on in the year. So if you look at Facebook's seasonality, they a lot of times report earnings better for their quarters later in the year, right? So we understand that their reporting is always going to be delayed. So a lot of times I look for Facebook to report really well late in the year and top of the year, right? Because I understand that third and fourth quarter is where they're going to do really well because of retail marketing and people really trying to where retail starts to pick up later in the year. So if you really want to break down Facebook's chart from a seasonal standpoint, I would really start breaking down year to year. So, get you a 5-year chart, start breaking down year to year and try to figure out where do you see maybe a spike in the share price from a year to year standpoint based on seasonality. OK, but another thing that you want to consider is that if you find out that Facebook reports better later in the year, that could cause share price to go up. So your entry, right, may be at best at this time of the year going into the summer where you can get in as it starts to move up towards the end of the year. Then we want to talk about the iOS 14 tracking changes, right? That can have some implications on Facebook, but this is one of the reasons why they created something like the marketplace, because what they want to communicate to retailers is that those changes are not going to just hurt Facebook. They're going to also hurt you if you utilize Facebook as an advertising platform. So maybe what you want to do is maybe have a e-commerce footprint on Facebook to where you're not worried that your people who are going to an external e-commerce site, maybe like a Shopify, they can't get access, right? Because your ads are going to be able to be opted out on Facebook. Then another thing, the potential U.S. tax hike, where Biden say that he may put a tax hike on businesses. That may be something that can affect them, but I doubt it because, like I said, a company like Facebook, they can have a whole accounting firm, right, work on them getting around paying taxes. So to me, when you're dealing with a company like this, it's not something that they're going to worry about. It's something that the media is going to talk about. Facebook can hire the best accountants in the nation to try to figure out how to get out of their tax liabilities, right? They have that kind of money. Post-cover recovery. So we understand that every company, because of COVID, had a little bit of a sell-off. They went down. How do they rebound from that? But if you kind of look at the chart on the 1 year, and we're kind of getting past that, we see how they went down because of COVID, and then they just walked themselves right up out of there, right? So you're going to see that on every chart, right? They sold off, and then now they're at a higher high than what they were before COVID. So before COVID, it was around 221. They sold off. We're now around a year later at 310. So they came up out of COVID really, really easy. Because a lot of times, a lot of people's perception was that tech was a better investment over COVID. And then Facebook just has to continue to impress on people that this is still a good place to park your money to get a return on your capital, right? So that's pretty much what we're going to talk about with Facebook. The real question with Facebook is that because we're dealing with such a mature company, where do you think this goes over the next 3 to 5 years, right? We're not dealing with a speculative play. We're not dealing with an upstart company. We're dealing with a company that's mature. They've shown they can make money. They've shown they have good management. So what kind of returns are you looking to get over the next 3 to 5 years? And then also, where do you think this company's going, and what's going to be some of their weaknesses and their threats that can maybe not allow them to grow right towards your expectation of a return? So if you think that Facebook from a share price standpoint is going to return, let's say 10% a year, right? What do you think going to be some of the weaknesses in their business model, or some of the threats to their business model that are not that will not allow them to return that? Then from an option standpoint, right? I used to trade Facebook, still somewhat traded, not as much as I used to. Their premiums are not that crazy. That's what I like about them. So you're not dealing with really, really spiked up premiums or really spiked up implied volatility like we talked about before. They're kind of like a big cruise ship. They do move. They just don't move that fast, but they do move. So you're not dealing with a company that doesn't have any volatility to it. But when you're looking at their premiums, they're not really, really spiked up, right? They're just not. However, I think Facebook can move a lot higher than the 300. I think eventually it will. It's just how long it's going to take for it to get there. But we've seen pretty much over the past year, Facebook has appreciated by almost $100. So that's a big, big, big move over the course of a year. So as an options trader, looking at their premiums, you're not seeing really, really beefed up premiums. And that's a good thing, because it means that you can actually get into this particular company. But I understand the price of premiums is going to be relative to the particular person that is playing the actual options plays, right? And so they're red today, maybe because Facebook is down today. But if you look at, let's say, their 1 year, they've consolidated around 250, 275, or really almost trading in a range between 250 and 300. And like I said before, the goal is to see how can they move up over 300. And you may see some of that movement as we get closer to April 28th. And then how they report is going to kind of tell whether they're going to continue to move and trend past that 300, or whether they're going to sell off and maybe go back right in this particular range for longer. But unless something really negative as far as news wise comes out about Facebook, I don't see them dipping up under 250 anytime soon. But you never know the way this market is, the way people is going back and forth over this yield curve, or whether or not we're past that. And then we're going to see tech now become the go-to plays that it was pretty much over the past year. So this is going to be a basic breakdown of Facebook. So what I would encourage you to do is, get a little bit deeper into their financials, kind of understand what are they talking about. Listen to their earnings call. So we talked about that before, and kind of understand where they think they're taking the direction of the company. Because like I said before, is that they're like a big cruise ship. So with these apps, right, Facebook Messenger, WhatsApp, and Instagram, Facebook bought Instagram back in the day to get the younger audience. Well, that audience now is a lot older. So the question I would ask for Facebook is like, what are they going to acquire from a social standpoint that's going to also bring in that newer audience? Because they're very much an established social media app, right? So years ago, they bought Instagram to bring that young audience in that was on Instagram. I don't think they're going to have an opportunity to buy TikTok or any of the other kind of like upstart apps. They may start looking at acquiring those. However, you're dealing with really just a really stable company, okay? So the question is, what are they going to do to try to, invigorate the market about them, to kind of make the market look at them in a new light, to maybe drive in some more revenue and then continue to bump up that share price? Or they're going to almost end up like a Coca-Cola, to where, it's a very, very slow, gradual increase in share price over the course of a year, but it's not going to be anything outrageous. And so that's what you want to look at with Facebook. They've been around so long. They've been making money for so long. There's really nothing except negative news that really moves them. OK, so that's what you really want to kind of look at when you're looking at this company. But understand, you are dealing with a real business with real good management that understands the actual business that they're in, and they understand how to make money in that business. So I hope this was a good breakdown for you. Like I said, this is a basic analysis. I would encourage you to go a lot deeper, do a lot more, look even more into this company before you start putting your money into it. If you're going to trade it from an option standpoint, I would tell you to get on those earnings calls, understand where they're going, understand what are some of the catalysts that are going to be taking place in the market, and also start looking at this chart and kind of understand its seasonality, because Facebook is a seasonal company, especially as we get farther and farther out of COVID. It's going to go back to its old school seasonality, which I've seen on charts that I've plotted out with them. Facebook does have a seasonal charting pattern, right? So I would encourage you to get into those charts and really start looking at it and combining that with your fundamental analysis. So now that this was valuable to you, hit me up in the comments, like the video, subscribe it, share it out to somebody else. This is David W. Williams, also known as Diamond Dave. If you want to learn more about the highest paid part-time job in the world options trading program, the link should be in the description. Talk to you later.